On May 12, 2025, something unexpected happened. The United States and China agreed to a 90-day suspension of tariffs. In a world filled with economic noise, that was a clear signal. The US slashed duties on Chinese goods from 145% to 30%. China dropped its tariffs on US imports from 125% to 10%. After months of tension and spiraling costs, the two economic giants have hit pause. But this is not a peace treaty, this is a window, and windows do not stay open forever. If you're in Singapore, and especially if you operate anywhere near trade, capital, or compliance, these 90 days are not for watching, they are for moving. Let's unpack what just happened and why it matters so much right now. The Geneva talks were intense. After the United States doubled down on tariffs and China responded with equally steep duties, both sides were feeling the strain. Prices were rising, markets were reacting, investors were pulling back, and deal flow between ASEAN and China started slowing. So this truce was inevitable, but it's not guaranteed to last. China's decision to accept a temporary rollback tells us one thing: they are buying time, not surrendering, not shifting strategy, but recalibrating. And that recalibration creates space for deals, for diplomacy, and for forward-looking players to get in position. Here's what's changed. Before May 12th, shipping from China to the US came with a 145% tariff tag. That cost was either absorbed by Chinese exporters or passed on to American buyers. Either way, margins were under pressure. Now, with the rate cut to 30%, those same exporters have breathing room. So do US firms selling into China, now paying just 10% instead of 125%. But tariffs were never just about pricing, they were about trust, or the lack of it. This truce doesn't restore trust, but it does reduce friction. And that's what smart operators are watching. Singapore sits in a rare position. We're not caught in the crossfire, we're standing just beside it. And that vantage point matters more during volatility than it does during peace. When tariffs fall, activity surges, shipments move faster, partners get bolder, capital re-enters, but only for a window. If you wait for a clear signal, the opportunity is gone. This is when the bridge builders step in, the fund managers, the trade advisors, the tax consultants, the corporate structure experts, the supply chain integrators. Singapore has all of these, and China still trusts us to execute from that neutral ground. So what should you be doing during this 90-day countdown? First, identify which clients have business that was paused because of tariffs. Help them unlock those plans now. Whether it's manufacturing, technology, logistics, or commodities, many firms shelved China-based deals when duties made them unworkable. Now's the time to revive those contracts. Second, preempt capital flow. Liquidity will move where trust lives, and Singapore remains one of the safest places to route deals between the West and China. Use this moment to create structured agreements that can withstand another round of tariffs later, if they return. Third, engage China strategically. They're not backing down, they're playing the long game, and they are watching who moves now and who waits. The companies and countries that engage during this reset will be remembered when it's time to lock in longer deals. This is not about who celebrates the truce, it's about who uses it. China still wants deal flow, it still wants market access, it still wants regional partners who know how to move under pressure, not just during peace. Singapore is built for that. But here's the danger: hesitation. If we assume this 90-day pause is indefinite, we lose urgency. If we assume there will be another extension, we miss momentum. Smart players are already moving. And the question is, are you? If you've been watching headlines, this is the one to act on. If you help clients do business with China, or expand into ASEAN with Chinese capital, or structure global partnerships, this is the moment. You don't need to predict the next 10 years, you just need to maximize the next 90 days. If you want to keep tracking these kinds of policy shifts, not in the news but in the room, we've built a private Telegram group for exactly that. Just drop a comment with "in" if you want in. Remember, this window won't stay open, and leverage always rewards those who move first.